income statement or the profit and loss account records buy, sell, records the performance of the company, the movement of the product. Sell, account on income, revenue generated from sales. Buy, expenses, we have cost of goods sold and operating expenses. So if you look at the income statement that we have here, revenue less cost of goods sold give you operating profit. Sales, cost of goods sold, operating expenses less operating expenses give you now the operating profit. The profit or the egg that has just come out from the chicken. Now, our goal is to increase our profit. To increase the profit, we either increase income or reduce expenses. In other words, increase the cost, the sales, what we sell, or reduce what we buy. Now, revenue comes from sale. Sales has volume of sales or the unit sales price. Volume times unit price equals sales. Cost of goods sold, the volume multiplied by the cost of. These two volumes are the same. Right? Sales price, this is higher than cost price, then we get the cost profit. To increase income, we can either increase volume or increase selling price. Now here, the company with durable competitive advantage, with unique product that have consistent customer need for that product, are able to charge as much as the customer is happy to pay. Either increase volume, the volume of sale or the sales price. Now, which is better? Increasing price or increasing volume?